Welcome to a weekly members update. It's January the 8th, Sunday, after the market closed on Friday the 6th of January. As always, please check the other video, which is the weekly market overview, because I'm not going to talk about that here. Just talk about some individual stocks. Obviously, I'm not looking at shorting this market just yet. It's still bullish. Waiting for, to be honest, in terms of, really making what I would call like a slam dunk kind of trade going into this, like they make my millionaire trades, when I really want all the ducks to be in a row for those. I'm going to wait until I see the first correction of what appears to be like a new strong upwards move in this bull market. When I see that correction bottoming me out, I'll be out of my radar out looking for some really golden trades there. So patience hopefully will be paid off soon for a make my millionaire trade. And if you see the weekly market overview, you'll see what I'm talking about there in terms of, the market needs a bit of a breather, and that will be my cue to get in here. So let's look at some individual stocks catching up on so far. Here's CF. I was in here around this level here. Very pleased with the progress here, pushing higher. In around this sort of level, and up it goes, keeps on pushing higher, doing nicely on options there as well as spread betting. Let's also look at CS. Similar chart, similar progress. This one's a little bit more steady and bouncy, but financials have been a great place to be. We had a tremendous action this week. This one, last week started off down here, and it's just had a huge bounce there off the 50-day there, on nice volume rising there on buying volume, and then just leveling off for a bit, which is fine. Let's look at Seadrill. Similar story, got in about here, and as long as these stocks, these kind of big comeback plays that I'm doing are above the 200-day, then I'm just going to sleep and watching this action. This one is just, it's got a break on above its 200-day moving average, and it's formed this, what is very tidy line of support now at around 341. So, if anyone missed this one, you could argue this was kind of like a nice little entry point here with a tight stop loss though, because it breaks that level support there. It could be on its way down further. So that's looking very interesting there, in a kind of consolidation pattern. TTPH nudged me out, but now it's got back above its the 200-day, the 40-week. So I'm going to go back in again on this one, just above here, around 4-ish, and then as always my stop loss is below the 40-week. So I'm going by the weekly close on these ones, not the daily. So I'm back in TTPH. Let's look at Amazon. It's been flying this week. Yeah, look at that. And this was a bounce off of the rising 200-day around this sort of area here, around 727. It's up a huge amount now, 795. Staying in there. Although I'm going to add a lock to lock the profits in. I'm going to say at around, let's say 779. If it's going down there, I don't want to lose that gain there from that nice bounce, as it will hit overhead supply around here. As FXY, this one looked like it was going to start a comeback here in the week, but it just kept on going down. So that one has been was shorted it back here once it gets below the 200-day. You'll see a pattern here above and below the 200-day, and then down it goes. So still waiting to lock in profits around the 84 level on that one. Otherwise staying in. And last week I mentioned FXE, and that had a bit of a bounce actually in the week, but didn't get into my stop loss area, which I said was above the 50-day, and it's turning down again there. So let's look at the weekly charts, where you really see where FXE, which is to short the euro. You can see that was a long level of support there, multi-year support that broke, and this is really all just part of a big pullback to what is new resistance and a former support. So break, pullback, and now this is that's what I'm looking to do, is see it break further. Out of interest, what's going on in the gold market is because I know some people are talking about a bounce, and yeah, it's bounced, but it's still long way off from being healthy, back above its 40-week. But you know, it's as you know, I'm long on gold for the longer term. Gold miners actually might be showing the way a little bit here. As the miners usually lead the metal, and they've made quite an aggressive bounce upwards here. But to answer the questions I've had about it, I'm not going to until they get back above the 200-day, or at least the miners do, and they're making a valiant effort, I must say. I mean, what's going on here actually was a downwards. If you look here, there's a downward stepping pattern. Look at that, step, which is very tidy for trading and shorting. But when we would have got out, if I'd have been short this on this step basis, I would have got out last week actually, because this new level of resistance here got broke. Gold miners broke out and pulled back. So let's see what happens next here. What happens next to GDX could be very instructive for the whole gold complex moving forward, but it's looking positive so far. One new one I was looking at is Staples, which is a big stationery retailer in the US. You can see from the weekly chart here how tidy this is. It gets above the 40-week, then off it goes. Gets below the 40-week and down it goes. And it's just got above the 40-week and now doing a little pullback here, which allows a tidy and tight little entry point at around this area here. You can see it break above the 200-day there. Big pullback. Cheap stock, cheap to trade. Cheap to spread bet with, tight stop loss, weekly close below the 40-week. So entering around this area here. So all looking good, and speak to you next time.